Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Alex Coffey, market strategist at TD Ameritrade, to discuss a September reading for the Investor Movement Index. The IMX is TD Ameritrade's proprietary behavior-based index aggregating Main Street investor positions and activity to measure what investors actually were doing and how they were positioned in the markets. And this month, they reduced exposure, Alex.
They did, and what's notable, Jill, is that it's the first time we've seen exposure decrease throughout 2023. It's actually the first time going back to October to November of last year. Every single IMX period this year, with the exception of one, has actually seen an increase in exposure. There was one unchanged exposure reading, but the first time in 2023 where exposure did go down for the general TD Ameritrade client population. As you mentioned, it did decline by about 1.05%. Notably, this was quite a bit less than the actual market decline. The S&P 500 was down closer to 2.7% during that period. So I thought that was interesting. Notably also, TD Ameritrade clients were net buyers of equities. So while reduced exposure, they were buyers of equities on that dip.
Yeah, and I thought it was interesting because they got into a couple of the Magnificent Seven names, which was fortuitous because, they've done quite well this week.
No doubt about that. And an opportunity that some of those names, the NVIDIAs of the world in particular, that had sold off quite dramatically in the August to September timeframe. This has been a name that TD Ameritrade clients have been quite contrarian in. They were buying a year ago when the stock was underwater, and they were selling throughout much of 2023 when the stock was really rallying into the AI hype and the, of course, earnings blowouts that they have had, but also waiting for opportunities to get back into the stock on pullbacks, seeing a meaningful enough pullback in the month of September to act on that, as it was one of the primary net bought names for TD Ameritrade clients in the month of September. Also joined by ARM, which of course is a more new semiconductor name that is sort of ancillary to that AI discussion. And of course, Apple pulled back quite dramatically over the last couple months, particularly in September, but also notably has been historically seen as a little bit more of a defensive, trustworthy name for clients, as it has been a little bit more of a stalwart over the last decade.
Right. And as per usual, the sell is always a mixed bag there.
Yeah, I think a couple of them make a ton of sense. One of them in particular, in Exxon, the stock had been on a really, really impressive run. Oil was so much of the story alongside of rates in the month of September. As it peaked out, Exxon also made a high towards the end of the month. TD Ameritrade clients may be looking to take some money off the table in a name that had done quite well. And then some of the consumer stocks, particularly those that are processing payments for discretionary purchases, Shopify, as well as Affirm being more in that buy now, pay later space. A little bit of stress maybe on the wallet, leading to a little bit of breakdown in confidence in investors in those names, but something to watch going forward if that's a continued trend.
All right, Alex, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.